Hi guys, and welcome back to another technical analysis lecture. Today we're going to be going over the indicator that is SFL Daily ATR. Now, ATR stands for average true range, and essentially what it shows us is the average range that a pair is going to move in the course of a 24-hour period. Okay, so you can see these orange lines on the chart. This is the indicator that we use. So to find it, you would have to go into TradingView indicators. It's in the public library. Search SFL Daily ATR, and then there you go. Once you put it on, it comes on. It comes on like this. So it usually has every day, but obviously going into this kind of looks a little bit clunky. So if you just go into the settings and just get it to show only current day, it'll only plot the ATR for that. For the current trading day. Now, the reason we use this is because it's sort of like a dynamic support and resistance. So if a pair has, by default, it's set to a period of 20 days. So what it will do is it will calculate the average movement for a pair for the past 20 days. So on the daily time frame. So what it will do, these past 20 candles here, it will calculate the average movement of that. So it'll add them all up, divided by 20, and it will give us the median number, which will correspond to the lower band to the upper band of the ATR. Okay. So now what we can use this for is if price is coming up here, let's say, so let's just rewind a little bit. As price comes up here, if we start thinking I'm going to look for a long position up here, let's say, targeting up here, you're aware that, well, the GU for today has already almost moved how much it has for the past 20 trading days. So on average, it's not really going to just, rocket up from there. It will probably stall out because traders will take profits. Let's get rid of that, looks a bit messy. Because traders will take profits around this area. So for example, let's say somebody bought the bottom and they targeted the average true range for the day because I want to close the position by the evening. As price gets up here, these traders will look to take profits. They're not going to have their targets above or massively above, because historically price has shown it won't go further than X amount of pips within one day. Now, you can use the ATR as a confluence to enter a trade. For example, if you have a liquidity trap, on a level where daily ATR is. So you could say these highs or, these highs, if price was to spike through these highs and take daily ATR, something like, use this price action for as an example. So price spikes through this ATR, yeah, and takes these highs. We know that there might be some mean reversion as traders take profits for the day, or sell into this. So I don't do it myself, but I know there's traders that will fade ADR, which is average daily range, or ATR, average true range. I don't really know the strategy. I don't know the steps they would take, but they would try and fade this movement back into some mean reversion. So it could be like 50%. So it could be the fib of the mass swing, faders will fade that movement as profit taking takes place at these dynamic areas of support and resistance. So it's only going to be a short video. So last thing I want to do before we call it a day is just have a look at some live examples of where this mean reversion takes place. So you can see here, we open up, we breach daily ATR to the downside, and then we actually move to the upside. EU's been quite confined recently. Again, touch daily ATR both sides before having some mean reversion and closing not too shy down of where we open for the day. Again, same here, both sides of the ATR touched. These days are miscalculated. Again, upside, downside, upside, downside. So you can see it's just a really effective tool for knowing sort of prices limits for the day. There's not many days you can see that sort of breach and just keep running. For example, here it doesn't just keep running up. It does have some mean reversion, so that's the reason we like to use it, as it gives us sort of realistic targets and you can use it to help you place your stops, place your targets, past ATR. As it's like I say, it's a likely place for a hot area to be an area of high liquidity due to new orders entering the market and people's take profits being tapped, adding liquidity into the market. So yeah, I'll see you in the next one.